everything related to Bitcoin is about the halving. It's like our last hope, like in Star Wars. You're my only hope, Obi-Wan. So, although it's interesting, I guess today there's been an announcement of an approval for the ETH futures ETF. Mm-hmm. You talk about that. And they punted on all of the Bitcoin spot ETFs. So yeah, interesting stuff. But let's go macro, and then we'll eventually wind our way back to crypto.
Oil buyers across the planet are facing some of the highest premiums for supplies they've seen in months or longer, as dwindling stockpiles at the largest U.S. storage hub reverberate through markets from Asia to the Middle East to Europe. Flagship U.S. crude cargoes on offer in Asia are coming in at the costliest premium this year. The spread between Brent and Middle East oil has jumped to the highest since February, while the premium for near-term U.S. supply is close to the highest since July 2022. At the center of the story is Cushing, Oklahoma, the delivery point for benchmark U.S. crude futures, which helps to set the price of oil across the Americas and beyond. Inventories at the hub are now sitting just above seasonal lows last seen in 2014. That's happening just as the world was already facing a tight supply situation with Saudi Arabia and Russia cutting output. In recent months, the U.S. had helped fill a void left in the market, routinely sending more than 4 million barrels every day to sate global appetite. Between overseas shipments and strong domestic demand, stockpiles quickly declined in the U.S. Now there's a question of whether those flows will continue. We're running out of oil. You can see how low storage is at Cushing, said Gary Ross, a veteran oil consultant turned hedge fund manager at Black Gold Investors, LLC. If we're running out at Cushing, then we're running out in Europe because it relies on U.S. exports. If the U.S. exports less, then where is Europe going to get its oil from? Mark Yusko explores the macro outlook for energy, especially oil prices, stating the dichotomy between the U.S. and Saudi Arabia as it relates to oil projections. He also explores the world of cryptocurrency. Exploring the just-approved ETH for Future ETF, he, however, states his concerns about such development. As we now get into the video, don't forget to hit the like button, subscribe, and drop your comments below.
Oil rising, again, is rising for all the wrong reasons. Right? It's rising for political means, in the sense that there's not rising demand. I mean, demand has recovered nicely. It has, but it's not accelerating. And what you've got is Saudi saying, we really don't care anymore about this deal that we struck with y'all. There's a good you plural, the southern version, the y'all. So I can cross, northern and southern, since I live in Chapel Hill, 25 years. Can you believe that? I've lived down here 25 years. Oil, I think, is going to hit triple digits. I think the Saudis are intent on floating some more of Aramco, and they want to maximize the money in their pocket. And they do have full control at this point, because there's not enough demand to suck up their supply changes. So, I think it's going to be an interesting challenge. And let me restate that. It's the other way. The demand is solid, right? We're not in a recession. We're not having falling demand. And therefore, when they cut, which is what they said they were going to do unilaterally, then prices are going to rise. And then you got the bots and all that come in, and the futures market, which we will talk about futures market later. Futures market allows manipulation of price. And that has happened in the oil market for decades, gold market for decades. So same kind of thing happening. And take the under on the I word, in that what we're seeing is simple manipulation of oil prices to maximize revenues to the Saudis. I mean, that's all that is. And that's what's being reflected in quote unquote CPI. And yeah, that's bad for the incumbents in government. Super bad for the president, right? I mean, there's a perfect inverse correlation between gas prices at the pump and presidential popularity. I mean, it's absolutely flawless connection. Anything over $2, your popularity starts to go down. Over $3, you're in trouble. And $4, forget about it. I mean, it's ugly. So if you can get below $1, I mean, you get elected no matter what you do. It's like the old Trump line, shoot somebody on Fifth Avenue and get away with it. Well, yeah, if gas prices are below $1, you can do whatever you want. So you know how I feel about this. I don't think we have inflation. Now, the one thing that I have to, correct myself on, I guess, almost like talking in the third person. It's ridiculous, but is back to cross-border. Liquidity is actually contracting. M2 went down for the first time in 90 plus years. I mean, actually contracted. So that is not something we've lived with in the past century, obviously. And so my whole point on it's just currency devaluation stupid. It's not inflation, not you stupid, but the world's stupid. I still believe that, right? I still believe what we're seeing is the leftover effects from the idiotic, modern monetary theory pump of money supply post lockdowns. And I think that's what the oil dynamic is. Everything else that you see starting to go down. I mean, shipping rates and commodity prices are not rising the way people thought they would. And that ratio of financial assets to real assets is stubbornly stuck down at the trough. Everyone's been predicting for 2 years this great rally in commodities over financial assets, and it really hasn't happened. And I think it's because the growth is moribund, right? We're growing 2-ish% if we're lucky, and that is stall speed, right? That's not fast economic growth.
Investment manager Valkyrie Funds LLC has begun adding Ether futures to its existing Bitcoin futures exchange-traded fund after getting the green light from the U.S. Securities and Exchange Commission, SEC, the company said on Thursday. The renamed Valkyrie Bitcoin and Ether Strategy ETF will launch on Monday, Valkyrie's chief investment officer Stephen McClurg told Reuters. It would be the first time futures based on Ether contracts would be available to investors via an exchange-traded fund in a boost for the crypto market. Mark Yusko now shares his views and expectations regarding this.
I texted to Pomp and Jason this morning, naked ETH shorts incoming. I mean, when you can go short an asset without having to own the asset, what doesn't matter what it is, whether it's oil, whether it's gold, whether it's molybdenum, whether it's Bitcoin or now ETH, that's a bad thing because naked shorting is not allowed in traditional spot markets. And spot is not exactly the right term, but in the stock market, you're not allowed to naked short. Right? You actually have to have the stock in order to short it. And same thing with a barrel of oil. In the olden days, if I wanted to trade you a barrel of oil, I had to have a barrel of oil. I couldn't just make up a little piece of paper that said, oh yeah, if I happen to have a barrel of oil on this date, I will get it to you. It's actually kind of BS. And I get it that financialization has some positives, but paper futures markets have a long history of enabling manipulation, and they make a lot of money for the people producing the paper and destroy a lot of people on the other side. So maybe I'm not as big a fan of futures markets as other people, but what is going to happen is large institutions now can short Ethereum the same way they shorted Bitcoin November 21, right? Almost to the day of the peak. They approved the Bitcoin futures ETF and it got $1 billion overnight. And everybody's like, oh, that's so great. I'm like, well, think about it. For every buyer, there's a seller. And guess what? There can even be more bigger sellers on the other side pushing that incremental trade the wrong direction. And once that cascade starts, because of high frequency and because of the machines, those machines will just start chopping the bids. And it's just, history says it's not a good thing for short-term price. History says it's not a good thing for free and open markets because it allows people with large balance sheets to manipulate. And I use the term manipulate intentionally because they've paid massive fines. They, meaning these large institutions, have paid massive fines, like hundreds of billions of dollars, without admitting guilt. I always loved that part. How the hell do you pay $1 billion fine, but you get to say, but I'm not guilty? Just the fact that you paid $1 billion says that you're guilty, right? I mean, otherwise you wouldn't pay. And so that's just, it's kind of like lobbying. If a firm, and I can name names because they did this, JP Morgan, if they manipulate the price of gold, right? They spoof the price of gold and they make $20 billion of profit, right? That's all public information. That's wrong, right? That's illegal. But then they pay $1 billion and they're okay. I don't think that's okay. And so the same thing is going to happen here. Not necessarily them, but it could be them. But somebody or somebodies are going to come into the ETH market now, and they're going to get very short this asset because they have to take the other side of everybody who piles in long. And I don't like it personally.
A Bloomberg exchange-traded fund ETF analyst says that the market could be inundated by Ether futures ETF starting on October 2nd. In a new thread on the social media platform X, Bloomberg ETF analyst James Seifert notes that 9 different Ether-based futures ETF are set to potentially launch on Monday, adding that it will be a crazy day. The financial firms on Seifert's list that are gearing up to issue Ether futures ETF include VanEck, Bitwise, ProShares, VolShares, Hashdex, and Valkyrie. The analyst goes on to say that other firms interested in issuing Ether ETF, such as Grayscale, have yet to submit updated filings and are likely not going to. The only potential issuers that have not yet submitted updated filings are Direction, Roundhill, and Grayscale. Likely some or all of them are just not going to bother. According to Seifert, the reason the ETF are likely launching early is due to the fear of a looming government shutdown. Last month, global investment manager VanEck announced that it's preparing to roll out its Ether futures ETF, which the company stated would not be investing in Ether itself, but rather in standardized cash-settled Ether futures contracts traded on registered commodity exchanges. At the time, VanEck said that the fund, which will be listed on the Chicago Board Options Exchange, CBOE, intends only to invest in Ether futures traded on the Chicago Mercantile Exchange. Also in September, VanEck released a statement saying that they expect effectiveness to occur upon the earlier of October 3, 2023, or the time at which the U.S. Securities and Exchange Commission, SEC, accelerates that effectiveness of the registration statement. What do you think of the approved Ether future ETF? Would it have negative effects, just as Mark Yusko pointed out? Let us know what you think in the comment section below. Also, don't forget to hit that like button, subscribe, and turn on notifications. Thanks for watching.